Today is February 20th, 2021. This is Professor at MoneyPigTrading, a former PhD drug researcher and now a trader and data scientist. Today we're going to talk about CCIV and Lucid Motors merger and the price target update. And it has been a very exciting weekend, as everyone can see. Bloomberg actually reported yesterday, February 20th, or today, that Lucid Motors is set to near deal to go public via the CCIV with a valuation of $15 billion. And this news, once posted, just make the whole social media boiled about CCIV. And I'm personally very excited as well for this news. In case you're not familiar or not following CCIV closely, it's a SPAC name, and it has been going out from the regular $10 per share, which is the price the SPAC started, and kind of parabolic up to at 1.6486. And on Friday, it actually dropped back to 52.94 EMA support. Just in case you don't have time, based on the Fibonacci retracement, we actually have a price target of $72 and $83. But I don't think that's a fair market value. Based on our calculation, the fair market value is actually $30. However, the retails actually have a lot of enthusiasm in this stock. So, and also I personally do think Lucid Motors has a high potential as an EV company, which provide a highly efficient energy solution. So very likely the stock price possibly will go up like Tesla once it become public. So it's really hard to predict at this point how the price will behave. We'll provide more details down there. If you don't have time, you can stop here. Basically, that's the conclusion. So really quick disclaimer, we're not a registered financial advisor. Please take it as education purposes, invest at your own risks. And we are currently holding CCIV stocks and options. So in case you don't know what is Lucid Motors, it's an EV company, produced high-end consumer EV. They're going to release their EV model called Air Pure. The cheapest model is about $70,000, and the most expensive one's $160,000. They're targeting this high-end EV market to compete with BMW, Mercedes. So they're not really a direct competitor of Tesla, based on the Lucid Motors CEO, who's also a former Tesla veteran. He said basically the target of conceptually they're going to be a competitor of Tesla, but their market right now is going to be a high-end market. So again, the major competitor will actually be BMW or Mercedes. And we actually have a month ago, we have a CCIV YouTube video. I'm going to provide the link down there. If you haven't watched it, we provided more details about what CCIV and Lucid Motors are. So basically, a SPAC has 3 different stages. If next week Lucid Motors and CCIV can confirm the merger, we're going to enter the stage 2 into stage 3, which is from the stage 1 is the SPAC name, just IPO, and the stocks are traded in the public market, and investors can buy the warrants and shares. And once the merger details coming through, what we can do now is investors have an option to redeem the shares, meaning they don't want to carry over the shares to the combined company. And actually, based on this really interesting study called A Sober Look at SPACs, and I provide the link here, and the figures actually from that paper, that 66% of, on average, of the SPAC stock doesn't carry over into the combined company. So yeah, that's one thing you would have to know, and that's often why a lot of SPAC name, once the merger news confirmed or upon merger or right after the merger happened, the stock price actually sell off. And also, I want to really highlight is SPAC stocks can be diluted like crazy because of this redemption. So based on this study, the average target company ownership of SPAC shareholders after merger, based on the past 47 SPACs, including the study between 2019 and 2020, is only 40%. So that means the valuation of the SPAC name, once merged into the target company, the valuation of that SPAC company will only have 40% of the combined company. So based on the Bloomberg news, the Lucid Motors valuation will be $15 billion. So if we multiply this 40% of valuation based on the historical data from this paper by the $15 billion, we'll get $6 billion of valuation for CCIV. And CCIV currently has outstanding shares of 207 million shares. So if we divided $6 million by 207 million shares, we're going to get about $29 a share. So based on all the historical average, $29 seems to be a reasonable fair market value. However, like I mentioned earlier, CCIV is really, Lucid Motors is a really promising company. So I do think once the merger confirmed, the stock price should, and I hope, will trade higher than this. The other thing, when you look at the SPAC name, we have to look at is the warrants. In this case, CCIV has a warrant of $11.5, started traded at this price, and currently I believe trading at $33, if I remember correctly, per warrant. And basically, for CCIV, one warrant has the right to purchase one share of CCIV stock, common stock, with $11.5 per warrant. Sorry, I make an oral mistake earlier. And basically, there are in total 42 million shares of warrant available, and that gives the investor the right who own the warrants to exercise their warrants and purchase 42 million worth of common stock. And currently, there are 207 million outstanding shares. So basically, that will provide potentially 20% of the dilution of the common stock pool once the merger is confirmed and finished. And the CCIV warrants are actually a little bit complicated in terms of the exercisable time frame. And since we don't have any confirmed merger details, a lot of numbers that were mentioned here are just speculative. And also, we don't have the merger day. So we don't even know what is the exact date that the CCIV warrants will be exercisable. But based on the CCIV SEC documents, the warrants will be exercisable on the later of 30 days after the completion of our initial business combination and 12 months from the closing of this offering, and will expire 5 years after the completion of the combination. So basically what it says is after 30 days of the combination or merger, this warrant will be exercisable. And pretty much throughout the next few years, these warrants will continuously be exercisable. So yeah, we just need to know if the merger will really go through, and also like when is the merger day if that really go through. So trying to switch to the next slides. So in this study, it's actually very interesting that they actually noticed right after the merger, the average institute ownership will drop from about 80% to 20%. So that means after a SPAC merger, most of the institute will dump their shares, and whoever hold the SPAC shares into the combined entity will mostly lose money. And there are actually so many cases we have seen. I intentionally hide the ticker name of this particular SPAC. It was merged. Finished the merger on January 7, 2021 at around $15 a share. And just shortly after, about 5 weeks after the merger is finished, it dropped from around $15 to $10.98 right now. So it dropped about 40% of the share values. So whoever holds the stock actually loses about 40% of their position. However, there are definitely some exceptions. And I do feel that possibly CCIV is going to behave like this QS, QuantumScape. So before QuantumScape was traded as KCAC, a SPAC name, and it actually merged with QS on, I believe, November 27, 2020, if I remember correctly. And upon the merger, it actually traded from $25 all the way up to $132.73 and dropped back down, and now currently back up. We actually have a QS video, really like this stock. We'll provide the link down there so you can take a look. But one thing we have to notice is the QS warrants are not exercisable until 6 months after the merger day. So QS warrant will only be exercisable in May. That's the time probably QS might have some pullback. But yeah, the QS could be an exception that just like CCIV with a lot of retail enthusiasms that continuously to push out the price after the merger. But most of the cases after the merger happen, a SPAC then usually pull back quite a bit. That's the conclusion here. One thing I really like about CCIV, the price action, and think potentially can continue is if we look at this key metric, percentage of the stock held by institutes, and this their SPAC name. And there are some really popular SPACs, as we mentioned the SPAC biweekly review on our two last videos. PSTH and NPA right now are really highly discussed in social media, and they are currently held by institute with 69.5%, and NPA is even higher, 85.87%. However, the topic today, CCIV, only 28.3%. So that means a lot of the shares currently are held by retails, and that means the retail enthusiasts might potentially keep up the price from here. Just like what we see with GME or QS or Tesla, where the retails are or were right about the stock price. So that's one metric to keep in mind, that CCIV are actually mostly held by retails. But however, looking at the charts, if you haven't entered any position with CCIV and you just put down your house mortgage into CCIV, please don't do that. Don't own CCIV right now. It's a really bad idea since the price is super extended. And like I just calculated based on historical price and data, that the fair market value is most likely to be around $30. So if you own with a lot of your money, you are exposed yourself into huge risks. And that's where a vertical cobalt spread option is here to help, right? So if you're looking at the CCIV stock, the entry price is, if you enter right now at $52, and assuming the merger even go through, right, but the price pull back to $30, you're going to lose 72%. And even though the merger actually go through, and the price went up to 72%, you're only making 38% from here. So that means your risk reward ratio is really low if you enter right now. However, if your CCIV average is like $10, $20, even just early 30, I think you're probably doing more than fine. In my case, I actually take off most of the profits right now and see how it goes. On the common stock, I'm still holding some call options and vertical cobalt spread for CCIV. But yeah, I think that's my point. Like, if you want to own right now, it's a really bad idea. But yeah, if you're holding some shares, you have a really low average, and you want to hold it for long-term capital gain, etc. It's probably not a bad idea in the longer run, since Lucid Motors could be potentially very bullish. If you really want to join the CCIV ride, just some idea. Again, we're not a registered financial advisor, but if you're looking at January 20th, 2023, 20 to 30 vertical cobalt spread, right now it's traded at $3.75 per contract. This vertical bulk debit spread means if once the merger is confirmed, CCIV merged into Lucid Motors, and if that happened anytime before January 20th, 2023, and traded above $30, you are going to make the max profit, which is 30 minus 20, so that's $10. So I make some typos. This should be $10, not $20. So yeah, your profit is actually should be around 270%, but that's way better than buying the common stock, where you're going to expose a lot of risks. While this CCIV long-term vertical bulk debit spread will actually give you a lot of time, and also as long as CCIV merge above $30, you're going to be paid handsomely. You're not going to lose all the value unless CCIV before the option expiration date on January 20th, 2023, CCIV traded below $20, then you're going to lose all the money. Otherwise, if it's traded between 20 and 30, you're going to make either some money or lose some money or break even, depends on a lot of details like implied volatility, and also how many open interests on the options, and etc. We're going to make more detailed video about vertical cobalt spread, but just some ideas that I think you should know. We actually mentioned a lot of details about the SPAC and what is SPAC, and don't be a back holder. In the other video, if you have time, feel free to take a look. And also, MoneyPigTrading has a long-term investment program on Discord. In 2020, we have a very decent performance with average return per trade is 19%, and our winning rate is almost 90% in this around 40 trades, so basically no lose in 2020. So if you're interested in the program, feel free to follow us on Twitter, like Jim Cramer shouted out on Twitter at MoneyPigTrading.com, or check us our Twitter Discord community at www.MoneyPigTrading.com. And our Twitter, YouTube, and Instagram are all MoneyPigTrading.com, MoneyPigTrading. Thank you for watching. I'll see you next time. And once we have more CCIV detail, happy to provide another video for a more precise price target update. But yeah, this is just a temporary video to give you some education ideas.